Just to kick off Rainbow, I've got my technical director, Dave Dodd here, and I'd like to proceed forthwith. Thank you for being here once again. Usual disclaimer. Now, Rainbow, since I presented, I think last year, we've done quite a lot in the last year. And one of the key things was we presented, or we published our preliminary economic assessment on the project, which I alluded to last year we'd be publishing, and these results speak for themselves in terms of we show project NPV of $627 odd million, IRR, very strong IRR, operating margin of over 75% or EBITDA margin, and a payback of less than 2 years on our capex of about $300 million. As I said, we are in Rainbow Rare Earths on what's known as the critical mineral space. For those in the audience who are not quite aware of rare earths, but they go to permanent magnets. Permanent magnets are key for the energy transition and the green energy revolution that's taking place globally with trying to meet zero emission in 2050. And they go into electric vehicles, wind turbines, your cell phone, consumer electronics, everything that's critical in the modern world today. We have two strategic assets. Well, Phalaborwa is our strategic asset, and we've just signed up a deal, which I'll speak to you a little bit about, with Mosaic in Brazil. And as I said, I've already said we've got robust economics, we've got innovative technology, which is Dave will talk about here, which puts us in a very, very strong position to pursue these other opportunities around the world. And we've got a very experienced team who can deliver. Now, as I mentioned, since last year, quite a lot's happened in Rainbow. And Shares Magazine, I think, published a note recently where, when we presented here, the share price was, I think, 8p, and we're sitting around at 16 odd p. So it's been a good performance from Rainbow. But importantly, it's on the back of the key announcements that we've been making over the last couple of months. One was the acquisition of the project in Phalaborwa from 70% up to 100% by initially going up to 85% ownership, and we've got a route to 100% ownership of that project. We've, I was looking for the pointer. We've got a pilot plant operating at Mintech in South Africa, our front-end pilot plant, which we've delivered, which recently just announced the production of the first mixed rare earth sulfate, which is a big de-risking step for Rainbow in terms of technology and proving that we can produce a mixed rare earth sulfate, which will then be fed into our pilot plant back end, which is sitting in Florida in the USA, which is the center of phosphate production in the US. We announced this week a deal with LCM in the UK. LCM are the leading metal business in the West, taking separated rare earth oxides into metal and then alloy, which feeds permanent magnet facilities. And as I said, LCM have been in the business for 30 odd years, an old Johnson Matthey business. And importantly, they're expanding their business on the back of a deal with GM here in the US and VUC, which is a big German permanent magnet manufacturer. So they're expanding in the US. That was announced in the FT today, if you would have seen that announcement. And they'll be expanding in Europe as well. And then recently announced the MOU with Uberaba in Brazil, which is with Mosaic, which is a global fertilizer business. They are when I started talking to them, they were a $20 billion business. They're now a $12 billion business, but it's a major business, world leader, and we managed to sign a deal with their project in Brazil. And as I said, and we have our foot on an opportunity in Morocco, which gives Rainbow a wide diversification in this market. We're the only rare earth company in the world that I'm aware of that's got diversified projects, and that de-risks us as well. As I mentioned, I'm not going to talk to these slides in detail, but neodymium and praseodymium are two key, what they call magnet rare earths that you need for permanent magnets. And you've got two other rare earth elements called dysprosium and terbium, which are also very important to go into the manufacture of permanent magnets. And at Phalaborwa, we're fortunate enough to have all four of these key permanent magnet rare earths that we'll be separating into separated oxides. As I mentioned, we are producing all four separated rare earth oxides across those four key magnet rare earths, but importantly, dysprosium and terbium are becoming even more and more important. We're one of the few projects in the world that have got all four of these permanent magnet oxides that we'll be producing. And as you can see from this, dysprosium and terbium only represent 4% of our actual production, but about 24% of the value, because they're very, very highly valued rare earth elements that go into permanent magnets, and they're critical for permanent magnets. This slide just highlights the fact that there's a big scarcity in dysprosium and terbium, as you can see from this line here. That's severe disruption, shortage coming up. China is short of heavy rare earths, which was dysprosium and terbium, and of course, neodymium and praseodymium are also pretty. Also, there's going to be a moderate imbalance coming, which we know about. But very importantly, dysprosium and terbium, there's a severe imbalance coming, and we're fortunate enough to have these in Phalaborwa as well as in Uberaba in Brazil, which I'll talk about further. Once again, this just highlighting the demand for permanent magnets and also the supply deficit that's been forecast by all commentators in the market worldwide. I mean, if you look at gold price forecasters, you'll have one gold price forecaster talking about $3,000 an ounce, and you'll have another forecaster talking $1,500 an ounce. One thing is common. All rare earth forecasters are forecasting higher pricing because it's been driven by macro factors and government legislation forcing us to buy electric cars, in various jurisdictions around the world, and also trying to hit zero emission in 2050. It's pushing wind turbine demand growth through the roof, and so it's been driven by legislation, and that's not going to go away. So all forecasters are forecasting higher earth prices. It's just a question of whether you believe it's going to go to $130 a kg for neodymium and praseodymium, or it's going to go to $200 a kg, but we all know it's going up, and that's very, very good for Rainbow. Our basket at Phalaborwa, we forecast to come into production in 2026. You can see we've got a very strong EBITDA margin and very strong EBITDA, which will be delivered by Rainbow. Now, this is the permanent magnet supply chain. As you can see, these are the various steps in this chain dominated by China, and where Rainbow is unique is that these first three blocks, we basically don't have any of those costs. We don't have mining, we don't have to form a rare earth concentrate, and we don't have to crack. We just do a little bit of the tip there, which is we're producing a mixed rare earth sulfate from our pilot plant in South Africa at Mintech, and then we go all the way through to separated rare earth oxides, and those separated oxides will then feed a metal plant, which will take that metal into alloys, which feeds a permanent magnet manufacturing. 90% of this is dominated by China, and as I mentioned, the fact that we've built the back end of the pilot plant in Florida in the US gives us the flexibility to possibly do on commercial scale production. We can footprint that back end pilot plant in the US, which will obviously make us significant to US investors, US funding, and all sorts of benefits if we decide to do that. But we've got the flexibility, and at the moment our pilot plant progress is proving that we've got that flexibility. So this is just to give you a high-level view on how this asset came about and why it is, as I mentioned, significant. So over here you've got a big hard rock carbonatite open pit mine, which mines phosphate hard rock, which was then fed for 50 to 60 odd years to a phosphoric acid plant there run by Sasol, the big chemical conglomerate in South Africa. The phosphate feed slurry was fed into the phosphoric acid plant, where they added two key ingredients, sulfuric acid and heat, to create phosphoric acid. And in the generation of phosphoric acid, it produces a gypsum waste residue, which resulted in these two gypsum waste residue stacks here. The rare earths that were in the phosphate hard rock, but in trace quantities, were upgraded in the production of the phosphate slurry, because that was through a concentration process, and then, as I said, fed into the phosphoric acid plant, which then produced the gypsum waste residue. And the rare earths deported with the gypsum into the waste residue. Very importantly, the fact that sulfuric acid and heat was added in this process means that we have got what's known as a cracked chemical stack. All rare earth projects, whether it's a hard rock project or what they call an ionic clay project, which they mine in China or Myanmar, produce a rare earth concentrate, which you have to crack. And two key ingredients in cracking a rare earth concentrate from a mineral form into a chemical form are sulfuric acid and heat. And this was done for our project at no cost, because it was done at Sasol's cost over a period of 50 or 60 years. So we have cracked chemical stacks, which is driving this very low OPEX here, which is the lowest in the Western world. And we believe it's even lower than the Chinese cost of separated rare earth production. and we know we've got the highest value per basket outside of China. Very importantly, the rare earth basket at Phalaborwa has got 29% of the rare earths on neodymium and praseodymium, two of the key permanent magnet rare earths, and that's one of the highest percentages of any basket in the world in terms of NdPr. There are one or two that might be slightly higher, but most baskets are below that. Sort of anyway, Mountain Pass, the $6 billion business in the US, or MP Materials, their NdPr and their rare earth basket is only 15.5%, to give you a comparison, and we almost double that. So that's driving our very low OPEX. As I mentioned, we did a deal which we announced just recently, where we have gone up to 85% interest in the project, and we've got an option to acquire the balance of the 15% to go to 100%, hugely NAV accretive for Rainbow, and that's been one of the positive announcements over the last few weeks in Rainbow. I think, as I said, we're going to move on to some more technical stuff here, and Dave will take over from me.
Thanks, George. Evening, everyone. I'll keep the technical side light. If anybody wants a deeper dive, I'm happy to go into that later after the presentations. We initiated a very detailed and extensive bench-level test work program to develop the process. It incorporated laboratories in Australia, South Africa, and the United States. Once we finished that program, we had demonstrated clearly that we were able to extract the rare earths from the phosphogypsum, and with a reasonable recovery rate, and we were able to launch the PEA, which produced the numbers that George has spoken about. So at that stage, we then needed to take this to the next level, which is to run a detailed, larger scale pilot plant continuous operation. And we elected to split that into two locations, with the front end, which incorporates the processing of the phosphogypsum to produce an intermediate product, the mixed rare earth sulfate, and then do the balance of the separation and purification in the United States at K-Tech's facility. And I think that's proving to have been a very sound decision, because we have all the expertise for the key separation and purification available at their facility. So we've been running the front-end pilot plant at Mintech, and we have produced mixed rare earth sulfate. Our recoveries have been around about the PEA estimate of 65%. It's unoptimized at the moment. We believe that we can push that higher. Our reagent consumptions are a little bit below what we had predicted for the PEA, and again, unoptimized. We can improve upon that, I believe. And so we're very much in line with our predictions from the PEA of what we would achieve. And the next phase for us really is to run the whole pilot plant for a longer period, and to optimize this performance so that we can perhaps improve upon the reagent consumptions, improve upon the recoveries. But we're very happy with where we've got to. We've met the PEA expectations at that stage. So that's our Mintech operation. And to give you an idea of the scale of the pilot plant, these are some photographs of the Mintech facility. I won't bother you with the details of that, but I think you can get an idea of looking at the people and the size of the equipment. This is a serious scale pilot plant. It's a good production level. Now, we have purchased a pilot plant which has been installed by K-Tech in their facility for us to cover the continuous ion exchange, continuous ion chromatography process, which was developed by K-Tech. It's a fully proven industrial scale process in other industries for different products, and up to levels well beyond that in terms of production scale that we're looking at. We know that pilot plant work has been completed prior to ours on rare earth work at K-Tech, which was successful in recovering and purifying and separating all of the rare earths. We have done a full-scale bench-scale program at K-Tech and demonstrated that we can achieve that on a bench scale. And we now need to go to the continuous pilot operation, where we're ready to get going on that. I think some of the key things on this process is that we took a long look at the traditional solvent extraction, very inefficient, 200 or more mixer settlers involved, toxic solvents that's used currently in China, and we decided there had to be a better way. So we did a survey of what was available as competing technologies around the world, and we decided that CIX and CIC looked by far the most prospective of them. Our team has good experience in continuous ion exchange, having designed and built 2 uranium projects that feature that. So we have a good understanding of these processes. It's a much smaller footprint, it's a much safer operation, it's much more environmentally friendly, and it's a very fast and precise extraction that we can achieve. So we're very excited about the fact that that pilot plant is now essentially complete in its assembly, and we'll be going into the water testing phase next week. We will be shipping next week our first batch of mixed rare earth sulfate across to Florida, and I expect that we'll be running on a continuous basis in Florida on this plant during October. So we're getting very close to the point where we can put our hand up and say on a continuous basis we can produce mixed, purified, separated rare earths that are suitable to selling on into the metals manufacturing. At this stage, we're feeling pretty good about where we've got to. Some photographs of the plant that's been installed in Florida, and these are the ion exchange columns. This whole unit rotates, hence the name continuous, so that you are able to change the duty of each column from loading the resins to stripping it back off to retreating the resin ready for starting again on the cycle in a continuous basis. We don't have to stop and start in a batch process. Very exciting for us at this stage. And George, you want to talk about LCM?
Yeah, so we announced the deal yesterday at the LCM, which was featured in the FT this morning. But basically, as I mentioned, LCM is a world leader. It's a UK-based business, but expanding on with a German permanent magnet producer called Wackerstrom. I think it's part of Siemens. They've done a deal with General Motors in the US. And on the back of that, that deal with General Motors, they are expanding their manufacturing facilities in the US, as well as on the back of VAC also expanding in Europe. They'll be expanding their manufacturing facilities in Europe. And so LCM needed a supply of separated rare earth oxides outside of China to feed these facilities, especially the facility in America being GM. They don't want Chinese sources of permanent magnets. So they came to Rainbow. They assessed Rainbow as one of the few projects in the world that they could see was going to go into production, and we signed that agreement with them earlier this year. So we're very excited about this. And as I said, it's basically just another building block in the supply chain that everyone's trying to build ex-China, and to create an independent source of these critical minerals in the West. This will be on our website, so you can look at this. But importantly here is our EBITDA sensitivity to pricing. You can see that whatever basket price you look at, and this bottom number here, where we still show an EBITDA of circa just over $100 million, is below the current pricing of rare earths at the moment. And at the moment, we're sitting somewhere around about here. But basically, if you look at what the forecast prices are, you can see the strong improvement in our EBITDA that we'll have at forecast prices when we're coming into production. But we're basically very resilient, which most rare earth projects in the world currently are not this resilient to pricing like Rainbow are. It's a very strong environmental project, as Dave will tell you. It's clean, it's green. We're cleaning up a big environmental problem at Phalaborwa in South Africa, and likewise we'll be doing the same when we start focusing on the project in Brazil. So in Brazil, as I said, Mosaic is a global business listed on the New York Stock Exchange. We did a deal to look at extracting the rare earths from their gypsum stacks there, or their gypsum stack. The gypsum stack in Brazil that they've got is way bigger than than what we see at Phalaborwa. And very importantly, it's a live stack. In other words, they are continuously adding more phosphogypsum onto that stack to the tune of 1.5 million tons per annum. They're selling 4.5, they actually produce 6 million tons per annum, but they sell 4.5 million tons per annum to the agricultural industry in Brazil. So there's a net deposition of 1.5 million tons. And very importantly, it's got an excess of 25-year life, the feed to the phosphoric acid plant. And the stack itself, if they stopped adding to the stack today, that stack would also have a life of over 20 years. So we've got 40-odd years, even longer, of source of rare earths coming out of Brazil. So a very long life project for Rainbow as another cornerstone to our growth. And Phalaborwa is a company maker for Rainbow, but this is even going to be another company maker. We announced results the other day. We confirmed the stacks got slightly higher grade than Phalaborwa, but it's a similar nature because of the source rock that's mined to feed the phosphoric acid plant is very similar to the source rock that came out of that fed the Phalaborwa plant for 60 years. As I said, the key steps going forward, we made good progress since I spoke to this audience last year, but the two key things are that, is the back-end pilot plant at KTech. A lot of big institutions have been waiting for this final de-risking step in Rainbow. That step, as you heard from Dave, is just a few weeks away. So this will be a major re-rating point for Rainbow, which is, as I say, a few weeks away. And then secondly, we're currently doing more drilling on the stacks at Phalaborwa, which we know is going to lead to a resource update and increase in the resource. And we're expecting anywhere between 4 to 6 years increase in the life of this project. So another very important key step coming in Rainbow over the next few weeks. So we've got a lot on the go. We've got some very important announcements. We've got the definitive feasibility study will be complete early part of next year, and that'll lead to financing of the project. And we still expect to keep our timetable of getting into production in circa 2026, which is a very short lead time for a project of this nature and of this size. I think that's all. Thank you very much. My time's up. Sorry. Final takeaway. If you look at the forecast pricing in Phalaborwa, that's the upside. You can look at this again at your leisure on the website. Thank you.
Thank you very much, George, for your presentation. Have we got any questions from the audience at all for Rainbow Rare Earth at the moment? Shall I kick it off? You mentioned about China. I mean, how important is it that you keep them at bay and you offer China's costing proposal against what you're offering? How are you going to cope with that when you come to production?
Well, as I said, we're going to be a lower-cost producer than China, so it doesn't really worry us. At the moment, Chinese rare earth pricing, they pushed the prices down from last year to almost half of where they were when we published our PEA. Yet we still, if we put those numbers into our PEA, we still make a very good profit. So at the moment, we can't see pricing coming much below where it was recently, which is $62 a kg for NdPr. It's already recovered up to about $73 a kg. And the forecast pricing is going to go up to by first quarter of next year, about $100, $110 a kg again, which is where our PEA numbers were. So I'm not too concerned about Chinese pricing, to be honest with you. We're in a very fortunate position because, as I explained, we don't have all those costs ahead in our project. 2/3 of our flow sheet is at zero cost to our project. We've got no mining, we've got no hard rock, we've got no drilling, we've got no crushing, no milling. We've got none of those processes.
Okay. And when you say about, is there going to be a funding round any time next year?
Of course there is to fund the project, but another key thing is you saw recently that the TechMet, which is a critical minerals fund funded by the US government, bought 12% of Rainbow. So that's the US government.
Yeah.
So we have the US government as a major shareholder, and we know that the DFC, which is basically the sovereign wealth fund of the US government, which is funding TechMet, which is investing in Rainbow, are looking to do further investment into Rainbow at the project equity level. So that will reduce funding requirements at Topco.
Okay. And so your ongoing CapEx costs are under control and you don't see them spiraling out of...
No, we're fortunate between Dave, myself, and the Rainbow team. Well, I did about 40 feasibility studies in my previous company. I sold to Emic Foster Wheeler. Dave was part of that company. Dave's done over 100 feasibility studies, and he's designed and built over 80 process plants around the world. I did 22 in my time at Rainbow, and all of those projects, I can honestly say, were on budget or under budget, because quite a few of those projects were what they call fixed price contracts. So we put ourselves at risk for that pricing, and we always made money on those projects.
Right. So the current interest rate problem, which we're all suffering at the moment, is not really impacting on your
No, we don't see
planning.
We don't see any significant capex creep at the moment, because you're right, there's been interest rate increases, but we've seen commodity prices come off. So price of steel's down, price of stainless steel, which we need in our project, is down, copper's down. So all those things obviously offset that interest rate factor that you're talking about.
Right. Okay. Is there any questions at all from the audience? Peter, that gentleman on the microphone, please.
Very interesting talk, thanks. I have to admit I'm a shareholder, so I've got a vested interest in this, and I must thank you for the good performance since your last talk. There's a major risk, however, and it's a good risk to have, that someone will want to buy you out. At the moment, the share price is 16p there or thereabouts. At what price would you be willing to sell up?
Probably about £1.50. £1.50. We're building a multi-billion-dollar business here. On Rainbow alone, on Palabora alone, Rainbow is worth well over $1 billion. Well over $1 billion. And with Brazil now, that speaks for itself. So we will be, when we bring Brazil online, I'm talking about 2 or 3 years after Palabora, we'll be producing the same amount of separated rare earth oxides that Lynas produce. And Lynas is a $6 billion business. So.
Are there any contracts in place yet, or are you still selling going to be selling on an ad hoc basis?
No, we'll only go into those discussions on completion of a DFS, which is kind of standard. When we have our final capex numbers, our final production numbers of our separated rare earth oxides. But there's no shortage of interest. ThyssenKrupp, who are a major off-taker for rare earth projects around the world, we already have an off-take agreement with them in our small Burundi project. And that's just one example of there are very interested parties.
Great. Thank you very much.